Good morning. Good afternoon to my friends in Europe. I hope everybody's doing well. Welcome to the Option Pit Ticker Highlight Show. In this show, we're going to break down one stock, one ticker, and we're going to break it down from a fundamental standpoint, what it looks like from a chart standpoint, and what it looks like from a volatility standpoint, and then hopefully give you guys a trade. That is our plan. So, with that, hey, and
There she is.
Yes, and I am joined by one Queen of the Candles, Leisha J. Leslie. Good morning, Leisha.
Good morning.
And I am joined by one Andrew T. Giovinazzi, the Viking of Volatility.
Good morning. You know what? I also thought another good nickname for Alicia is the doyenne of Doge.
Well, and I was just thinking, since you're actually Italian, we need to come up with something around a centurion rather than a Viking.
Oh, we could do that.
Or a gladiator.
I was gonna say I'm not Italian.
What? I didn't know you were Italian.
I'm not. I thought you were talking about me.
No. Andrew, we need to come up with something around a centurion or a gladiator or a something Roman. But we'll get there. Anyway, I'm Mark Sebastian. I am your only option. Let's dig in. And this week we're looking at an option shopper special. This one came from Leisha looking at her charts, and it is Frontline Ltd. This is a global shipper of energy and oil. So it's a Cyprus-based firm, technically. A lot of interesting dynamics here when I looked at it fundamentally. So it's a $5.4 billion market cap. They have 88 employees. That is a pretty good market cap per employee, if I do say so.
They run a tight ship.
They run a tight ship, indeed. The revenue was really high, 1.93 billion in revenue. But what I noticed immediately was that their earnings before income, interest, taxes, and debt were 1.05 billion, and their net income was 5.94 billion. So I was like, okay, what's going on here? I looked in, they got a load of debt, about $3.5 billion worth of debt, which makes some sense when you consider they're buying boats. But
a lot of boats.
A lot of boats. But everything beyond that looks pretty darn good. Good cash flow. Cash per share is pretty good. The book value, almost $11. Relatively low PE. Pays a really nice dividend, 62 cents a quarter. That div yield is pretty darn great. So you can't really argue with that. And with the conflict going on in the Middle East, what they're able to charge and what they're able to kind of dictate in terms of pricing really works in their favor. Oil prices going up is generally good for the freight liners because they're able to charge more. So things are looking pretty up here. Looking at the long-term chart, it's had a pretty nice 2-year run. On the 5-year, it's been just kind of slowly and methodically going up, and that's because they make money and they pay dividends. So this has a really nice methodical rally. You worry about this big drop-off from back in 2011, but my guess is that's more of a corporate action type of thing. It's had some splits. It had a stock split back in 5-for-1 in 2016. So, this is a company that has pretty much just produced consistently, just goes up and up. It's one that if you said, Mark, what's a holding that you feel pretty confident about is going to make you money between dividends and stock appreciation if you bought it and closed your eyes for 10 years. This is on that list. It really is, because they, like I said, they just go up. They just make money. And unless you truly believe that global demand for oil is going to drop, which it's not, anytime in the next 50 years, Frontline looks pretty darn good. So that's kind of my take on it in terms of where it is right now. That dividend schedule is just, where's that earnings and dividends play? Dividends. I'm looking for one thing, folks. No, that's the earnings analysis.
Yeah, huge dividend.
It pays 62 cents a quarter. I mean, that is really nice income. And, just from a stock perspective, 62 cents a quarter, run a covered call program on it makes loads of sense here. And I'm going to pass it off to Leisha now, because she's going to look at the charts. The reason why we're looking at this one, and thank you for pointing this one out, Leisha, is that it popped up on her charts, and she's got some insight for us in terms of how this thing is moving.
Well, those of you pitchfork drawers, it follows my pitchfork very nicely. And I have a low of Friday, January 21st of 2022.
Oh, wow.
And the next pivot is Thursday, March 2nd of 23, and Wednesday, June 28th of 23. And look how nicely that has followed the pitchfork. A lot of wallowing around the median line, but that is a pattern that's expected. It can be expected, but continually moving higher. We have an ascending pitchfork, and it is continually moving higher. It's held the support of the parallel channel. Couldn't break out above the resistance up here, 25.88. And I thought bull flagging last week, and today that's kind of failing today. Resistance is up here, 23.87. If we can't get a close above 23.87, we may visit down here 22.84 and then 21.86. So very important to be able to close above that 23.87. Maybe we get a dip and scoop it lower. We do get a close above there. It'll be resistance 24.78 before the previous high. And above there, if it really is ready to take off, now you see that previous high there stopped it. That could take it up here 26.60 and even higher. The highs were 29.40 most recently, May of this year. Oh, let me show you real quick the moving averages. The 21-day, the 50-day, and the point of control, all sitting there converging right around 23.43. That could be some really solid support today.
Oh, yeah. It actually bounced. The low for the day is bouncing off the 50.
Yep. So a lot of nice support there. I hand it over to you, Andrew.
All right. Now Andrew is going to give us his take on Frontline's volatility.
I will move this over. I will move this here. So let's take a little look-see. So Mark mentioned there's pretty big dividends in here, upwards of $1.50 a year or more. So a lot of times that's somewhat vol crushing. Here, let's take a little longer. Well, I thought that was kind of interesting. You kind of go out like this, like there's, it's a little,
It was a higher volatility stock than I was expecting, Andrew. I got to tell you.
yeah, like a little. So do you think, I think anyway, from a opportunity point of view, I think this is kind of around the Middle East, a little,
Mm-hmm.
I don't know, like the nerves there. We also highlighted a lot of volume recently, right, in here.
Yep.
And I think that's kind of jacked the vol up. I'm like, I think like call spreads, like kind of wide ones maybe, or just sometimes you just want to freaking whack a put out. Now, you're not getting a ton of money for them. I think the October cycle for us is there's not enough time there.
Yeah.
But at a 41 vol, I could see, the 24 calls are $1 in November.
I
I
don't think
mean,
that's very expensive.
it's not very expensive now. Vol a little higher, but realize vol like is kind of up here. So the 90-day average is around 41. So at least the calls are fairish. And in my view, when I look at this, like the Middle East situation ain't going away yet, right? So there's a little geopolitics that's causing the volatility. I don't think $1 is bad for those calls. Stop yourself at 75 cents. It's one of those things where, because Alicia's saying it might break down, like paying $1 for them.
Yeah.
And then stop. That would be my idea here. I think the stock could easily go back to 25 in like, a heartbeat.
And
So
yeah,
if it does
it
that, so
it's been moving at about 3% a day, up and down.
yeah,
So it does have some teeth to it.
yeah.
And yeah, you buy it for $1, you get a 2-day rally, and that dollar will turn into $2 pretty fast.
Right. So what was Leisha's ugly spot where she didn't like it if it kind of broke down there? So I wouldn't let your calls evaporate.
No. She had thrown out, I would say, like where we are right here, that 2340 level, 2343, the 50-day moving average. That was one that she threw out. And then what was your other level, Alicia?
Below, if it closes below all those, that convergence of all those moving averages and the point of control, 2283 is the next level of support.
All right. So we want to break 2283, and then we know we're looking to break out.
We would be toast. So that's how I would anyway. That's how I would see playing this one. Just here, I can write it up pretty simply though.
Yeah, it's a simple, easy play this week. Simply buying the FRO. That's the stock symbol. The FRO, November 15th, 24 calls. They cost $1. The big play that we saw, you'll notice that there are buyers of the 28 calls in this for November. They are consistently going after that strike. And there's decent open interest in the January 25s.
Let me see.
And in the February 23s. You have some option fingerprints here, Andrew. And
yeah, there's definitely a shorter term like there. That's a big purchase right there. I mean,
if you look at the total open interest, the open interest is total open interest on average is 30,000 options. Currently, it's 72,000.
Yeah,
62,000 of that open interest is calls.
So
there is
a lot of option buying here. So I'm looking like $1 here for the 24s. You could probably get them for 95 cents.
Yes, I like your idea a lot, Andrew.
If you get a rally, maybe you sell a call in front. But that's really that's the deal. That is the simple and efficient route here. I don't think we're going to get any. I just read this weekend how this is true. Did we actually send missiles to Israel, but with U.S. troops manning the missiles? Like that's a big. I don't know. I got to ask Frank. That sounds like kind of a big escalation, but the market does not care.
It does.
The market does not care. And I think that's all I got.
Yeah,
How about everybody
that
else?
is your show for today, folks. So today, as we focused on Frontline Ltd, which is a shipper, I walked you through why I liked it fundamentally and showed you the long-term chart. Leisha kind of showed you the near-term technical levels, and then Andrew, looking at the realized volatility and the implied, came up with a inexpensive call option to buy, which is the November 24 calls. So there you have it. We're buying the FRO November 24 calls for $1, targeting $2 on those. I think this thing could easily get to 25 bucks in a snap. All right. So with that, that is our ticker highlight show for October 14th. So for the centurion of call something or other. I'll come up with something, Andrew. For the Viking of volatility, Andrew T. Giovinazzi, and the Queen of the Candles, Leisha J. Leslie. I am Mark Sebastian. I am your only option. And I want to remind everybody your opportunity to join us in Trade to Close. We have a follow-up event this Wednesday at 2 p.m. I'd like you to join Hannah and Vaz as they walk through some really important information about trading the last hour of the day. And we can't wait to see you there. You can click the link above to join us in Trade to Close. All right, everybody. Like I said, I'm Mark Sebastian. I am your only option. This was the Ticker Highlight Show. Make sure you're liking and subscribing on YouTube. And if you have a stock that you're interested in, leave a comment or a stock suggestion in the comments, and we'll take a look at it. Have a good day, everybody.
Bye-bye, everybody.